Hi everyone, and welcome to today's deep dive of 3M. I plan to do 2 deep dives this week, the first one on 3M, and the next one will come out on Friday. And I will start by going over all of the various products that 3M produces, from aerospace to veterinary supplies, and even fire safety products. I will start my analysis with the bull case, as well as some of the projects that 3M is working on. Then I will go over the bear case, and some additional evidence to support the bear case. Then I will go over the Morningstar report, and then I will finish up with their price predictions. As always, there will be some jelly at the end, which is something I enjoyed outside of the markets. If you have big dreams like buying this 5-bed, 8-bath mansion in North Carolina, or if you're just getting started on your financial journey, definitely like and subscribe. This property comes with almost 13 acres and 2 large ponds. It has a very classic looking kitchen and a dining room to match. Too bad about that carpet though. It has a rustic looking living room and a very, very large master suite. It has a very bright white master bathroom that keeps on going. Kind of a weird tub area though. At least it has a very nice theater room. It's currently on sale for $2.5 million. To keep your dreams at the front of your mind, like and subscribe. Welcome to the Portfolio Bulletin. Let's get started. First, let's look at 3M products. So most people think of 3M as office supplies or masks because of the current situation, but they are much, much more than that. They do have the tapes and abrasives that most people think of, but they also have advanced materials, aerospace and aircraft maintenance, automotive parts, commercial solutions, electronics, energy, healthcare, safety, and transportation. I don't plan to go through every single one of these categories, but I do want to hit the highlights. So this is aerospace. So they work on cabin structures, cabin protection, even the thermal acoustic systems. Looking at the structures, they do composite parts and metal parts on the interior of the plane. In terms of propulsion, they make engine components, which is something that I didn't know. So somewhat they are competing with GE in this category. And then in terms of assembly and completions, they do painting and interior assemblies. Moving on to animal and pet care, they do tie-on masks for vets. They do blankets for your pets. They do normal hair rollers, vet bond tissue adhesives, and medical tapes. Moving on to what they call automotive products. They do various orbital sanders, dust removers, the pads for the sanders, and workstations or tool chests. Looking at what they call energy and electrical construction and maintenance, we have various gels that either stop the flow of electricity or improve the flow of electricity. And then they have specific tapes, which are corrosion resistant to make sure that the flow of electricity continues. And they have electrical insulating putties. They even produce advanced materials, such as ceramics and ceramic microspheres, defense products, fluoropolymers, and friction shims, as well as glass beads and polymer processing adhesives. They even make the crowns for molars. And all of this is to say that 3M makes way more than just office supplies. They are a very large and innovative company, and they have a lot of proprietary products. Moving on to the first bull case article, why you should buy 3M. They say that 3M has outperformed the market for the last year, the last 3 years, the last 5 years, all the way up to the last 25 years. And over the last 100 years, they have never failed to pay a dividend, and they have increased it every single time for the past 59 years. All of this basically means that 3M is a very stable and successful company. Next, they say that 3M itself is built on innovation, and that 1/3 of its revenue over the past 5 years have come from new products, which is impressive considering that their revenue was over $30 billion last year. They also rank as the 3rd most innovative company in the world, behind only Apple and Alphabet. They say that 3M focuses its innovation on things that help people every day, and it has a very diverse product range from Post-it notes to Scotch tape, Thinsulate, industrial adhesives, surgical dressings, reflective materials, and materials for electronics. This is just restating all of the things that we looked at in the first part of the video. Next, it talks about 3M's ability to adapt. Considering the rise of electronics, they have dramatically increased their production of cushioning, lap films, and materials for circuits to include cleaning, coating, and cooling fluids. Even as driverless vehicles become more and more prominent, 3M continues to supply adhesives, bindings, abrasives, and other 3M products for those specific needs. They say even though 3M is able to adapt to the various situations, it goes on to say that 3M does face some disruptions, but due to its diversity of products and footprint across the globe, stating that 60% of its sales are outside of the US, 3M has been a stable investment for decades. So why should you invest in 3M right now? It says don't expect 3M to be a fast grower. However, it is very stable and it has leverage and competitive advantage in multiple different industries. They continue to say they call for 2% growth annually, which speaks to about an 8 to 11% growth in earnings per share through 2021. They continue to streamline and grow their international markets and increase share buyback programs. They say even on the low ends of their growth estimates, and let's assume that 3M's earnings multiple comes down to around 20 times, which is just behind the 24 times PE ratio of the S&P 500. In that scenario, total stock appreciation to include dividends would average around 36% over the next 5 years, which is a very solid return of 6.4% with a great deal of safety. They say, of course, it's possible that the multiple could come down further if the economy sees a contraction, but even despite that, 3M should offer a relatively safe haven. And they also think that 3M should have little trouble beating its goals and paying its growing dividend. Finally, they say you should never ignore a company that you own, but this investment should allow you to rest easy. It's tough to say what could happen in the short term, but history indicates that 3M will deliver market-beating results for investors over a long period, especially if you participate in a DRIP program where your dividends are reinvested. Moving on to the next article, I chose this one because it shows that 3M is benefiting from the current Rona situation, and they are currently working with MIT to help develop a new Rona test. They were chosen by MIT to tap into their expertise in medical device manufacturing, as well as its institutional experience in biometrics and bioprocessing. It says they plan to use the same biomaterials that they use in their air filtration products, as well as pathogen-detecting products used for food safety. It also mentions the fact that they have doubled their production of N95 masks to 1.1 billion per year, and they expect to double that again within 12 months to 2 billion per year. Again, this is all to say that they are actually kind of benefiting from the current situation. Next, I'll go over the bear case. Why did 3M fall double digits in the first half of 2020? So first they say, because it's a multi-industry manufacturer, it was always going to take a hit from the Rona. This means that because they manufacture so many things, of course demand for at least some of these things was going to go down due to the Rona. They say it's a frustrating situation because this is the year that the restructuring by CEO Mike Roman was supposed to start showing benefits. Unfortunately, due to the Rona, it's going to obscure any underlying improvements for now. The so what is the disappointing performance in the previous years led to the company losing its premium valuation rating in the industrial sector. As such, investors were looking to see improvements in 2020, but in short, the high-quality industrial company at a premium price became the value option in the industrial sector. They say there was clear evidence that 3M didn't deserve its premium rating in 2019, but the case can now be made that the stock is undervalued. Looking at the end of 2018's guidance, they had projected a 2 to 4% growth. However, they had to cut to a 1 to 4% growth and ended up coming in at 3.2% over the course of the year. Looking at the organic growth, you can see each of the different industries that they're involved in are listed down here. You can see electronic has been on quite a volatile path. And then right at the end of 2018, everything kind of grouped up right here below 5%. Which culminated in that 3.2% over the course of the year for 2018. And then this trend continued through 2019, and then we hit the Rona. So 3M has had quite a difficult time over the past couple years. Looking at free cash flow, 3M is in blue, and you can see they were at the bottom of this list, which is a list of industrial companies. So you have Honeywell, Illinois Tool Works, and Dover Corp. And of these four premium industrial companies, 3M's free cash flows were the lowest. Looking at the now what section, It says investors should keep their eye on the company and give it a few months because the company is giving monthly updates on sales trends. They say it will take some time for 3M to turn the corner, and as such, investors should be cautious. However, due to the substantial free cash flows, it should limit the downside in the near term, and the restructuring might attract value investors. Moving on to the second piece of bear case evidence, strong N95 mask demand couldn't even drive up 3M's sales. It says in their May sales result, their overall sales dropped 20% versus last year, stating that the positive impacts from the Rona couldn't overcome the negative impacts. It says 2 fewer business days last year equated to a 9% impact, but the safety and industrial segment saw a 17% decline despite the continued strong demand for N95 masks. Each of the company's 4 segments saw sales drops, ranging from 11% in healthcare to 30% in transportation and electronics. They then reiterate the numbers from the previous article, stating that they're trying to reach 2 billion masks in total output within 12 months. They also say that President Trump invoked the Defense Production Act, forcing 3M to keep most of their masks domestic. However, they did come to an agreement that said most of the masks will come to the United States, however, some will go to support Canada and Latin America. They say the overall May sales decline was across the overall footprint of the company, seeing a 15% decline in Pacific Asia, 21% in the Americas, and 26% in Europe, the Middle East, and Africa. So in summary, for the bear case, 3M has been going through some struggles. They were in the midst of a restructuring, and then the Rona happened, further making it more difficult for the company to optimize its systems. Moving on to the last part, the Morningstar report. You can see Morningstar gives 3M a 3-star rating, which means it's in the fairly valued range. Current price is right around $57. It's actually at $57.80 right now. They estimate the fair value at $170, which means it's right around 92-93% of what they are considering fair value. It still has a pretty high dividend at 3.71% and a forward dividend of 3.74%. Current market cap right around $90 billion. And despite the restructuring, they still say it has an exemplary stewardship. Looking at their bull case, 3M continues to emphasize innovation and keeps competitors away with their generous level of R&D spending. The firm continues to benefit from its share of technology platforms, which is applicable to multi-use cases. Their technological advantage allows them to charge a 10 to 30% premium for their products, as well as bring down unit costs. They say 3M is likely to profit from its segments in geographies with faster growing GDPs, which over the long term should allow it to outperform the industrial production index. Moving on to the bear case, they say 3M has earned double-digit returns on its cost of capital over the last 25 years. However, the firm's current R&D efforts have struggled to generate additional sales. They also say 3M is facing several headwinds, which include challenges from its automotive and semiconductor markets, customer inventory destocking, as well as an economic slowdown in China. 3M will also struggle to attract and retain the best and brightest engineers, as future generations will increasingly gravitate towards the technology sector. Looking at their financials very quickly, I want to point out the fact that in 2019, their overall revenues went down, their net income also went down, as well as their earnings per share. So in 2017, they really had their best year. 2018, they were kind of downtrending. And then 2019, they had a negative year. And then we hit the Rona. So their financials tell a very similar story to all of the articles to this point. Looking at the historical price action, you can see in 2016, they uptrended all the way into the end of 2017, and then they've basically been on a decline since then. The quantitative fair value has been a pretty decent indicator of 3M price action. The price has been above and below the fair value several times, so it seems to be a decent estimate. Going into the end of 2021, they estimate a price right around $200 per share. So to summarize, 3M has been a very strong company based on its historical performance. It's outperformed the market for decades at this point, but it's really come on some hard times over the last couple of years. If you're a long-term investor, this could potentially present a buying opportunity for you. In terms of short-term trading or short-term price action, 3M is not a fast mover. It's a pretty stable company, and it's also a very strong dividend payer. For me, this doesn't really fall into the buy now category. I do own some 3M, And I have sold some puts against 3M at $140. But remember, this is not a company that's going to explode like a tech stock will in the current market conditions. For now, I'm just going to continue to watch the stock. Let me know down in the comment section what you think about 3M. Are they a buy? Do you own them right now? Let me know your thoughts. Definitely like and subscribe if you got any value out of this video. Of course, none of this is financial advice. This is all for entertainment value. And with that, let's get to the jelly. So today's jelly is a song called Big Enough. This is written as kind of a serious song, but it's also humorous. So here's what that sounds like.
I've lived in lonely cities. I've crossed deserts on camelback. Town might be big enough. See, I reckon what you're saying. I roam without my boots on. And then I ate my horse's meat straight from my horse's bones. You can shoot me in the mountains, in the cold, fat rain. All cowboys need to trust that this town might be big enough for both of us.
As you could tell, the song is kind of meaningful, but also hilarious. I thoroughly enjoy this song. Let me know down in the comments what you think of it. The full song is linked in the description. Definitely like and subscribe if you got any value out of this video, and have a great day.